You sit there under the gauze of Warburg Pincus each and every day with the idea of low nominal GDP, deflation, 4% if you're lucky nominal in the U.S. Let's merge. I mean, that's the only solution, isn't it?
Well, that's what's happened to commoditized industries from iron and steel all the way through. And it's taken 50 years for the semiconductor industry to become a thoroughly commoditized industry, requiring enormous capital requirements in order to make anything. But what's also been going on at the same time is as the technology gets commoditized, as from the point of the user begins to disappear, then new applications open up. And it's easier and easier and cheaper to put this technology to work.
But for the company, let me jump in here. And for the companies in the middle of that squeeze, it's a real problem because it's not just semiconductors that we're talking about. Servers are commoditized. Laptops are commoditized. This has been a huge problem for IBM. So it's great for new technology, but the companies that used to provide these products are having a hard time.
But this is Andrew Mellon 101. I mean, the bottom line here is Agilent. Then it became Hewlett-Packard. Then it's whatever you want to pronounce it, Avago out of Singapore, and they're buying in the monster Broadcom. I mean, Scott McGregor's been there 10+ years.
Yeah, and this is going to continue. We're going to see more and more consolidation in the infrastructure, hardware technologies. You know, my friend Mark Andreessen likes to say, and has been quoted, software is eating the world. The way it eats the world is because the hardware is so cheap.
I hear a note of hope in what you're saying, which is that we talk all the time about whether or not growth is over. And the argument hinges on one question. Have we seen the gains of the Internet yet or not? And it sounds like you're saying we haven't yet.
No.
We're just seeing it.
We're halfway through the digital revolution. You know, it took 50 years from the first railroads to Montgomery Ward and Sears Roebuck. The killer app of the railroad age, retail mail order. That's what transformed the economy. That's what, you know, back in 1880, every town in America had a shoemaker. By 1920, all the shoes in America were made in Brockton, Massachusetts. People who made shoes really got squeezed. That's creative destruction. We're going through that now.
Why isn't Amazon the killer app of the Internet? Is there another killer app we don't yet know about?
Well, Amazon is one, e-commerce, the integration of information and transactions back and forth. But that's getting us over towards these new unicorns, isn't it?
Bill, you and I got enough gray hair to remember when the SOX was quoted every day, the Semiconductor Index. I just put this out on Bloomberg Radio Plus. You will see it digitally worldwide across Radio Plus. And for those watching on TV, here's what Bill Janeway and I remember, which was this is like Twitter, Facebook, and the rest of them. It was semiconductors to the moon. Remember they used to walk around and you'd go into meetings and they'd have the substrate disc and they'd try to tell you the new technology, and it all died here with a vengeance in '01 and really never came back, Brian.
But this has been the history of every great technological revolution over the last 250 years. In the 1920s, you know what the greatest growth stocks in America were?
Railroads?
Electric utilities. Florida Power and Light, growing at 20% a year. Then utilities matured, went flat, but we got to develop all the array of electrical appliances once the electricity could be taken for granted.
How do you sift this merger through your work at Bloomberg Business Week? I mean, it's, again, pharmaceutical consolidation, telecom consolidation. No, the government got in the way. Nobody's going to get in the way of this transaction, are they?
I don't know that anybody's going to get in the way of this transaction, but as we watch the industry get squeezed, we're looking at these companies, like we said, like IBM, who used to sell stuff. They now have to sell services. And what we hear them say constantly is, we're going to move to the cloud. And that just sounds like hope over reason.
Well, it may be hard for an IBM to complete the transition of business model, but what has happened now, we're into the 5th generation of computer architectures of the environment for digitalizing the world. Now it's mobile cloud. What that means is, first, the technology disappears from the point of view of the user, just like electricity did in the 1920s. Second, the cost of developing new applications, open source, cloud resources, incredibly cheap. So you have many more hopeful monsters. Some of them, maybe it's an Uber, maybe it's an Airbnb, maybe it's one we haven't even yet heard of, emerges from this Darwinian competition.
Within your wonderful experience, I mean, you know, the decades you've put into Wall Street, how do smart people avoid the stagnation that we see in semiconductors? How does Bezos avoid it? You mentioned Andreessen. How does he avoid it within his interesting transactions? How does Tim Cook avoid it? I was in the Apple store yesterday, and they're innovating with this new new super thin MacBook. It's all engineered, and Johnny Ive is giving, is it Ive or Ivy? Help me here.
Ive.
Johnny Ive. Johnny Ive is giving me all this touchy-feely design. How do they avoid being Broadcom in 10 years?
Well, first of all, some of them may not. In fact, there are people really informed, really knowledgeable, who think that Apple's becoming a kind of consumer product company with brand extensions, and that, you know, Steve Jobs really is dead.
This MacBook is so cool. For those on radio, you got to go to the store and just see it.
I would say that's already happening, right? So Johnny Ive is amazing, a once-in-a-generation genius, but Apple is not great at software. They make amazing hardware, and right now they're getting they were dominant in music. They're getting their lunch eaten right now by Spotify. Better technology.
Why aren't they Broadcom in 10 or 12 years?
I'm not saying they're not. But if you know 10 or 12 years from now, Tom, you're so far ahead of me. 3 to 5 years is the most I can hope to see. What I do see is the delivery of services that you used to have to, and this is a big economic issue, you used to have to pay people to do a hell of a lot of what is coming in over the web, from the cloud, for small business, for big business, for consumers, for individuals. This transformation is continuing. And there are investment opportunities all across it, but downstream, not upstream, not midstream.
The investor says, look for unicorns. We're going to get to that in a second. The macroeconomist says all those people are going to have to find new jobs, new training. That's a challenge.
We're going to have much more on this through the morning here. Of course, a $35 billion merger. I'm going to call it off the top of my head, 8 times larger than the AOL merger of a number of days ago. I want to review this, and Vonnie Quinn will have much more through the morning. Critically, Avago, this is the Agilent former HP buyer from Singapore. They see the deal immediately adding to non-GAAP earnings and cash flow. This is this money is cheap outcome where things become immediately what the pros call accretive. That's an important idea. It'll be interesting to see where the shares settle out on the market opening.